All right, my name is Chris Campbell. I'm a practicing CPA, and I work with small businesses and individuals to help them pay the least amount of taxes possible while keeping them out of jail. So today I wanted to talk about making sure you're using the right set of financials and the fact that there are two sets of financials. Now, I had spoke about this before, and what's prompted me to talk about it again is because I recently spoke with a new potential client, and they had explained to me that they had recently done their taxes and come to find out that they had owed a ton of money, which they didn't understand. So come to find out that they had a pretty big tax liability as a result of profits from the business, but they did not understand where these profits were coming from because there was nothing really in the bank account as far as the business bank account is concerned. So they didn't quite understand why, because the bank account was on zero, that they owed all of this money in taxes on money that they felt they technically didn't have. So upon further review of the return, we come to realize that they were using the wrong form of the financial statement. Their taxes based upon accrual-based financials. And what happened was that the business that the owner ran had booked a bunch of revenue but had not received the money yet. So on an accrual basis, they were due the money and they were owed the money. And because these financials were on an accrual basis, they were owed the money. And because you're owed the money, you can actually book it as revenue. The problem that they encountered here is that they use that to actually do their tax return, which when you do your tax returns, that's usually on the cash basis. And the big difference here is when you recognize the revenue. And there are differences for book purposes and financial statement purposes and tax reporting purposes. Revenues are actually recorded at different times. Normally, when you do reporting for taxes and file your taxes, you usually file the cash basis style of reporting. But when you're just putting together financial statements, you usually use the accrual basis. The big difference is being that you book revenue at different times with each method. For the accrual method, you can book the revenue and recognize the revenue as soon as you're entitled to it, versus taxes with the cash basis, you don't book the revenue until you actually receive the cash. Now, what can swing big differences here is that, so for example, if you sell items and you get paid later for them, right? So you sold the item, you're owed the money, but you haven't received the money yet, right? In that scenario, from a book standpoint, from a financial reporting standpoint, the revenue would then be recorded. So when you see your books, oh, okay, you made this sale, but you haven't received the money yet. But now, from a cash basis, you would not report that until you actually get paid. So you might have sold the product or provided the service, and you might have gotten paid 30 days later. So on a cash basis, which is what you use for taxes, you wouldn't report that income until you actually receive that cash, say 30 days later. And the problem here, the problem that my client ran into was that because they were using the accrual basis, they were owed a bunch of money that they didn't take in yet. And they used those financial statements, that accrual basis statement, and they recorded a bunch of income that they had not received yet. So as a result, their tax bill was sky high, and the client was wondering, well, how do I owe all this money? I don't even have this money. But come to find out, they were using the wrong set of financials. So the moral of the story here is that when you are putting together your taxes, or when you're presenting your financials to someone to prepare your taxes, make sure that you're using the cash basis statement. And I can see how this can happen with many folks, because with a lot of folks use QuickBooks. And when you do the reporting function and you go to the profit and loss reporting function, I believe it defaults to accrual. So if you're working with someone and they say, okay, yeah, just send me the profit and loss statement, you go in, you churn it out, you may not be paying attention or understand that there are two versions of your financials. So you definitely need to make sure that you are choosing the cash basis when you're giving it to your preparer for taxes. If you are using financials for, say, loan purposes, if you're going after a loan, then you may want to use the accrual basis, because that's more of a snapshot to see how your business is doing. But when you're reporting for taxes and doing your taxes, You want to work off the money or the cash that you actually received, not money that you're still waiting on. So that's a quick tidbit. That's an important thing, and I figured that it'd be useful to many of you out there. So tax reporting, make sure cash basis, profit and loss statement, reporting pretty much for anything else, make sure that you are using the accrual-based financial statements, profit and loss. All right. So hopefully this was helpful. That's all for now. That's all for now. Hopefully this was helpful. So if you have any more questions about this topic or any other tax or accounting related questions, feel free to reach out. I'm happy to help. All right. That's all for now, and I'll talk to you in the next one.